Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the daily time frame with this very bullish scenario where we're looking for a double 1-2, after which we expect a very impulsive big wave 3 to the upside for new all-time highs. In this scenario, the first wave 2 retraced to the 0.382 Fibonacci, taken from the low to the high of this wave 1, which is a less common target for a wave 2, but it is a target nonetheless. And for this second wave 1, we are looking for a drop to the downside inside this most common target area for a wave 2, which is between the 0.5 and the 7.86 Fibonacci, taken from the low to the high here, which is between 37k and 30k. You can also see the vertical lines on the chart. These are Fib times taken from the low to the high of this wave 1 to compare wave 1 in time with wave 2 in time. And by far most commonly, a wave 2 will end after the 0.382 Fib time, which is currently sitting on the 19th of February here on the weekly chart. What is interesting, however, is that this second wave 1 is very long in price. This second wave 1 is a lower degree Elliott wave count compared to the yellow degree. So we have a 1, 2, 3, 4 and a wave 5 in yellow, and inside the yellow wave 3 we have the green count 1, 2, 3, 4, 5, meaning the green count is a lower degree Elliott wave count compared to the yellow count. Now what you prefer to see is the lower degree count being shorter in price and time compared to the higher degree wave 1. However, this second wave 1 is longer in price, however, it is shorter in time. If you take a Fib time from the low to the high of the yellow wave 1 to then the end of this wave 2 over here, and we toggle on the 1-to-1, then you can see that the high of this wave 1 is made before the 1-to-1 Fib time. So it is shorter in time but longer in price, and this is something that we do have to keep in mind with regards to the probabilities. Now this wave 2 here was very shallow, so preferably the second wave 2 will be a deeper corrective structure where we are going to retrace in a 3-wave structure to the downside, where a wave 2 is most commonly a zigzag structure. However, it can be any corrective structure except for a triangle. This scenario also works quite nicely with the volume profile of this very high time frame range over here. You can see we spend a lot of time in this range, and therefore I also think it's very low probabilities also from an Elliott wave point of view. You're just going to pump to the upside without any retracement in this range and spending some more time in this range in 2024. So you can see we entered the range over here. This was support, resistance, closed the candle inside, increasing probabilities for the point of control, passing the point of control, increasing the probabilities to move to the value area high. Beautiful rejection at the value area high in combination with the golden pocket taken from the high to the low here. Very nice confluence for then a rejection and now support at the middle of the range, which is the point of control once again. However, as you can see, we want price to lose the point of control in this scenario to move to the downside, potentially retesting this area, but now as support. Resistance, potentially retesting it again as support before then continuation to the upside. If we look at the second bullish scenario, we are looking at this scenario here where we are not looking for a double 1-2, but a 1, 2, 3, 4 and a wave 5. In this scenario, we're then working on the wave 4. Common target for 4 is the 3.2 to the 0.5 Fibonacci, taken from the low to the high of this wave 3, which is between 39.8k and 37k. Of course, we want to see a nice 3-wave structure to the downside as well in wave 4, not hitting the 0.618, however, at 34.1k. Because this wave 2 was shallow, complex and long in time, the rule of alternation does increase the probabilities that this wave 4 can be deep, short and simple corrective structures is a zigzag, is a flat, or potentially a triangle here in this range, right? So it can be relatively short. That's why I have the 0.382 on my chart as a minimum target for this wave 4. Commonly, a wave 4 is longer in time than a wave 2, so you want it to pass the 1-to-1, which is sitting here on the 10th of June, but the 0.382 for me would be a minimum target, as usually corrections at least have a relationship with the 0.382, which is sitting on the 4th of March 2024. Also, this scenario works nicely with the volume profile, where we retrace to the middle of the range, eventually move back towards the upside, have a bit of a deviation outside of the range. I think it is interesting to move move above 50k because of the greed and the FOMO and the YOLO, people talking about 500k and all that, but then you grab that liquidity and drag it towards the downside for the wave 2 to retest again the lower half of this range before then continuation to the upside. What is nice and what we sometimes talk about here as well is of course the weekly gaps. We have one gap down here and we had the weekly gap here, and this weekly gap acted beautifully as support. Price moving inside the gap, going to the other side of the gap, finding support and bouncing towards the upside. On the daily chart, we closed the candle inside the weekly gap, increasing the probabilities to move to the lower side of this gap to fill the gap, which then happened, and a nice reaction towards the upside here. We also, however, have a monthly gap, right? We have a monthly gap here, the all-time high monthly candle, bigger move to the downside, and then we had the next candle, and this then creates a gap between the low here and the high of the next candle. This gap has been tested once for then a solid rejection to the downside, but now this month we have tested it for a second time. If price can make it back up here once more, it really increases the probabilities to move inside this gap and fill the gap to 53.3k. The bearish scenario here is a three-wave structure. It's an ABC to the upside, which of course fits a macro bearish scenario where we look for much lower lows. But here we are then looking for a wave A, B, C. The 0.382 is a common target for a wave B, taken from the low to the high of wave A, less common for 2, more common for B. So we do have to think about this scenario with the wave C, where after a wave C we expect much more downside to come. The target for a wave C most commonly is between the 1 and the 1.618 trend-based fib extension from the low to the high to the low here, which as you can see at the moment is nicely respected. And a time target for wave C most commonly is between the 0.618 and the 1.618 fib time, taken from the low to the high to the low to compare AN time with wave CN time, which at the moment is also the area where the high has been made over here. If we then shortly zoom into the lower time frames, then locally we are looking for a 5-wave impulsive structure to the upside in a wave A or a wave 1, after which we then expect a 3-wave corrective structure to the downside in B or 2, and then continuation to the upside in either a wave C or a wave 3, the invalidation being the low of this move here, because we don't want B or 2 to go below this low after a 5-wave impulsive structure to the upside. Now, interesting resistance to the upside to end this wave A or 1 is first of all this target box that I have over here between 43.9k and 44.4k, but also we have to think about the daily gap here. So currently we are inside this daily gap. We had the high, moved towards the downside impulsively, created the second candle, and this over here then created a gap on the daily chart. We tested it once over here and rejected. That's also what you expect. That's good to see. But now we closed a candle here just inside the white box, and we are now starting to range inside the daily gap. It does increase the probabilities a bit that we are going to fill this gap towards the upside. So we do have, of course, important resistance above price, but as you can see, it is in the middle of the gap. So we really want to see proof of resistance. We want to see weakness, whatever that is for you. Maybe you want to see bearish CVD divergences, lower high on price, higher high on the CVD, RSI weakness, MACD, whatever it is, candlestick patterns for a move towards the downside if price hits this resistance area. What is also interesting is that we have the golden pocket exactly at the same level as the high of the daily gap. So that is also an interesting level for potentially the high of a wave 1 or a wave A, and then see a retracement towards the downside. Gotta say, it is quite a stretch, and we first have to pass this resistance area. So let's take it level by level and first observe what price does here. If price can reach this target area here, and only if we see strength here and price moving above, then we are going to be looking for higher prices, where even for a bigger 3-wave corrective structure or potentially an impulse down, having a first move to the upside in an A or 1 going to the golden pocket is no problem at all. There is a Gartley harmonic pattern as well, which is famous from the golden pocket bounce, 786, and then a continuation to the trend. If price would continue towards the 786 in the straight line here, that is when probabilities really start to change to potentially look for this high over here. As you can see, we have a higher low on price, lower low on the CVD, which is the chart that you see over here, and you can see it higher low on price, but on yellow a lower low on the CVD. That's a bullish CVD divergence. However, I do prefer to look for CVD divergences on the right side of the recent high. This pivot of course is on the left side, so preferably we wait and see what price is going to give us over here. And we do have a little bit of support below price as well. If you pull a volume profile from this range over here, then the point of control is an important level, as well as the value area low here at 43k and a point of control at 43.1k. So if we then look at the probabilities of the different scenarios, then on the high time frame, the probabilities at the moment are neutral between the bullish and the bearish scenario. We do have a 302 bounce at 24k, so that arguably adds a little bit of probabilities to the bearish scenario because it's more common for a wave B than a wave 2. However, locally at the moment here, we don't have clear weakness yet to suggest that the high here is a wave C and we go for much lower prices, but at the same time, we also don't yet have clear signs of continuation. So we are going to observe what price continues to do locally, and then we're going to take it from there. On the micro time frame, we are looking for a wave A or 1 to finish soon. We have interesting resistance here, and if it doesn't hold, we're going to be looking for the high of the gap at 45.5k. But let's first see what price does here, if it can reach this target box right, and then we'll take it from there. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.